on a second. Just put up another sign. Put up another sign that says time to do show. I'm looking at something here. Get rid of those two. Okay, we're back. Rush Limbaugh and the Excellence in Broadcasting Network. Great to have you here, folks. As always, I am America's real anchorman, America's truth detector, the doctor of democracy. All combined in one harmless, lovable little fuzzball. Nice to have you with us. Telephone number is 800-282-2882. Email address is lrushbo@eibnet.com. Let me see if I can do, on the fly here, a little different explanation of the futures market. Let's say that I am an evil CEO of big oil. And I am hated and despised, even though I am one of few people doing everything I can to make sure you have your gasoline, your jet fuel, all of your petroleum products. Even though I'm the only one engaged in this, I am vilified. But I still have a business to run. I have a publicly traded business to run. I've got shareholders I have to answer to. I have to keep my stock price up. I have to make a profit. I can remember, folks, when I was growing up, the pursuit of profit was an admirable thing. In addition to all the wonderful things 30, 40 years ago that we were proud of in this country, we were proud of our auto industry. We were proud of the space industry, NASA. We were proud of so many things. Today we've been told to hate all these great institutions. They're all out to screw us. Big insurance, big retail, Walmart's out to screw us. Walmart has to be gotten even with. Big pharmaceutical, now big food. And what I find comical about all of this is that if you listen to the critics, the leftists and the Democrats, all these outfits are out to kill us. They kill their customers. McDonald's exists to see to it that you become an obese slob with diabetes and have a heart attack. They don't care that you might get sick and that you might die. They want you to die. But they want you to die after you have more kids that they can then kill. I mean, this is not said directly and so forth, but this is the idea. We think every major corporate entity and even some small businesses, like contractors, painters, so out to screw us. Auto mechanics, who's certainly going, well. Okay, so I'm this big oil CEO. And one of my many responsibilities is to continue to find new supplies. Now, I may decide as the CEO that I don't want to increase my total supply, but I don't want it to go down either. And I may decide that I don't want to show all kinds of brand new discoveries every year for a couple years. And in the third or fourth year, have some growth in supply, but not as much. And so I don't want Wall Street saying my business is down when it's actually up from my baseline, but it may be down over the previous 2 years. So if I'm an evil big oil guy, I want a steady supply. I want to be able to manage the increase in that supply so that my stock price and my investors continue to go up and they're rewarded. And I don't want anything to happen to make it look like I'm running a business in a bad way, so I don't want wild fluctuations in supply. If I see a big pool of oil out there and it's got gobs and gobs of barrels, I'm not going to grab it all as soon as I can. I'll grab it as often as I can, as when I need it, to show a steady increase in growth. So I need to be able to know. Not know, but I need to be able to, well, come close to knowing. I need to be able to get a feel for what the price of my product, my commodity, is going to be years into the future in order to have stability. I can't run my business if I don't know or have a pretty good idea what's going to happen with the price in the future. And I also have to have systems in place so that if I'm wrong in what I think the future is going to be price-wise, supply-wise, that I've got insurance against perhaps more supply coming up and lowering my price and what have you. So enter the futures market. Let's say as my evil big oil guy that I want to drill and get oil from shale. But that I, as an evil big oil guy, know that if oil goes below $80 a barrel, I'm not going to get it out of shale because I'm going to lose money doing it. So once oil surpasses 80, and if it goes a little higher than that, I'm going to start buying some contracts on the futures market at prices that I know are going to be what I need to get that oil out of the shale. It's different than getting it out of the sea bottom. It's different than getting it out of some dirt tract in Texas. If I run an airline, if I'm Herb Kelleher, the former CEO of Southwest, and this is true of any business. A lot of people ask me, let me explain this way. A lot of people say, how come these athletes get all these multi-year contracts? Whether they're guaranteed or not, how come they do? Because any business needs to know for stability what its fixed costs are going to be for as far out in the future as possible to budget other things. So if you've got a baseball team and a roster of 25, and you know what your payroll is for as many years in the future as possible, given the productivity of your players and so forth, then it helps you price other things in terms of what you have to buy, what you have to spend in order to show a profit, or to at least try to stay ahead of the game. So labor costs, that's why labor contracts are done with unions well in advance, years out, so people can get a fixed idea what their costs are going to be, because only then can they manage for the future and plan for it. So if I'm Herb Keller and I'm running Southwest Airlines, and I know that the fuel price is my number one expense, close to labor, depending on what the fuel price is, but now fuel price is obviously number one expense, I need to know what that fuel price is going to be as far into the future as possible. So I might have enter the speculators in the commodities market, and they are taking risks, and they are betting on what the price is going to be in the future. And some of them are betting it's going to go down, some are betting it's going to go up. They are taking a tremendous risk because they don't know what it's going to be. But people running their businesses take their actions and say, okay, if I'm Herb Kelleher of Southwest, he did a smart thing. He bought a bunch of oil, gasoline, jet fuel, in fact. He bought a bunch of jet fuel way in advance. He bought contracts for it, even before it had been refined, at a certain price. So let's say that his gallon of jet fuel cost him, and I'm just as an arbitrary figure, when he made his deal to buy gallons of jet fuel in advance, years in advance, he made a deal to buy that jet fuel at, say, $3 a gallon. When the years come, and after the years pass, and jet fuel is now $4.50, he's got contracts for it at $3 because he bought it way back when. And that's why Southwest, and one of many reasons, has been able to show a profit. Other airlines have tried to do this as well. Everybody tries. But the point of all this is that the commodities market, the futures market, serves businesses and customers well, because it helps businesses plan for the future without such erratic price swings in business expenses. Now, you probably say, well, Rush, then how come there's all this volatility? Well, the volatility has come from the rapid increase that's happened lately. But whatever the increase is, you're still going to have people betting it's going to stay wherever it is, 136 or 137 now, or it's going to go to 125. If you're running a business related to oil, and if you can find a contract to buy X number of barrels of oil today at 125, when the price is 137, then you would do it. And there might be somebody risking it's going to go to 125, sell short and sell it to you. Who knows? But the bottom line is, Walter Williams here is right. The commodities market does not affect the consumer price. It does not have an inherent harm by intruding on what otherwise would be thought of as the market, because the speculator market, the commodities futures market, is as much a part of the market as you are on the tail end of the process, buying the retail product to put in your tank. Brief timeout.